Hello everyone, I hope you had a great weekend. Welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. So far today it's been relatively quiet. We are seeing European markets trading slightly in the red so far. We're now approaching the US Open in about half an hour's time. Really, there hasn't been any major talking points so far in the market. Like I say, we are seeing slightly in the red in most of Europe. Italy down just over 2%, so actually really very much leading the way. But the rest of the European markets are only slightly in the red, and I think we are just continuing to see these similar moves to the last few weeks, in which we've remained very much range bound, and we had these nice gains on Friday around 1.5 to 2% in Europe, and now we're just seeing those gains being paired, so very much staying within that same trading range, which I've touched on a number of times previously. One of the talking points today was the G7 over the weekend, and once again we did have the typical Brexit warnings from a number of European officials. The other thing that came from here was in relation to currency devaluations, and I think that's really what's driving the strength in the yen so far today, is the fact that the Japanese and the US very much going toe to toe on this issue. You had Treasury Secretary Jack Lew, you also had Japanese Finance Minister Taro Aso, and very much in disagreement on the Japanese yen. Jack Lew suggesting that there's nothing necessarily irregular about the moves. Aso claiming that these moves are both disorderly, they are being speculatively driven, and it's a one-way move, and therefore would justify some devaluation. So the lack of an understanding here on the issue, and the lack of a backing for ASO from other finance ministers and other officials from outside of Japan, potentially makes the ability of the Japanese to actually devalue the yen, not the yuan, the ability of the Japanese officials to devalue the yen either through normal monetary policy measures or otherwise seems to have been made a little bit more difficult by the lack of support from their peers, and maybe that's what's leading into some of the yen strength that we are seeing so far early on in the session. The other thing that came from there, like I say, was to do with Brexit. This is going to continue to be a hot topic this week. We're now exactly 1 month away from the EU referendum in the UK. The polls still showing the Remain camp in the lead. Now, depending on which polls you look at, you do tend to see varying degrees of a lead here. Some of the polls showing very slender leads, whereas some of the phone polls in particular are showing much larger leads, and then the betting odds are much larger. Probabilities again, I think it's Betfair now around 83%, Ladbrokes around 78% in favour of the implied odds being of a vote to remain in the EU. But again, this is going to be determined by a number of factors, including what we see over the next month, of course, from both the in and the out camp, but also from the voter turnout. We did have the short-term outcome for the UK economy, a report that was compiled by the Treasury released over the weekend, and we're going to hear from Judge Osborne today on this issue, warning about the UK economy could be up to 6% worse off in terms of GDP if we vote to leave the EU. Again, this is going to be, I imagine there'll be a number of there'll be more pessimistic factors associated with this. I think there's around 500,000 jobs that the Treasury thinks could be lost as part of this. Now, the rebuke from the Leave campaign is, of course, being the fact that this has been a very biased report that's been compiled by the Treasury. They haven't touched on any of the benefits that could possibly be gained from leaving the EU. They've obviously, their calculations will assume a number of the most, the worst option factors of an exit over the next at this referendum in a month's time. And they've also questioned the credibility of the data as well, suggesting that the Treasury has been repeatedly wrong in its forecasts and the impact of certain events on the UK economy. So again, it's really very much more of the same old. We've now had the long-term report and we've had the short-term report from the out camp now, from the remain camp, sorry. I guess there's going to be a lot more to come over the next month, and I think we're going to hear a lot more still from the vote leave campaign, because even until now they continue to be relatively quiet on this issue. Now, let's move on to the markets today. You've got the economic calendar up in front of you now. We can see that we've had some very mixed data from the Eurozone this morning with these May manufacturing and services PMIs. The overall PMIs did show a deterioration again in May, continuing to see slowing growth in these sectors. Now, there's going to be a number of reasons behind this. Slower global growth, of course, is going to be a major factor in the impact on trade. Slower demand from China and other emerging markets. So really just continuing to point to more of the same thing, really. Slower growth in the Eurozone at a time when really the region could do with higher levels of growth in order to bring down that unemployment rate and help return inflation to this 2% target, having fallen back into deflation territory. But then again, it doesn't really come as a surprise given the fact that any growth in the Eurozone has been very, very gradual for quite some time now. And given the global economic environment, lower growth is seen as almost the new norm. And with this being so much slack in the Eurozone economy, it'd be very optimistic to think that we could really get faster levels of growth from the region. Still to come today, we've got one or two pieces of US data. We've got the market manufacturing PMI to come from the US in about 45 minutes time at this stage. Still got consumer sentiment, consumer confidence data to come from the Eurozone as well. I guess the key points today is going to be Fed focused once again. Now, the Fed's of course been a very key factor in the markets as of late, especially over the last week, having come a lot more hawkish and a lot more firm in the tone that we've had from the Federal Reserve. Now, we were due to hear from three different Fed officials today, James Bullard, John Williams and Eric Harker. Now we've heard from John Williams and James Bullard so far. Very much been in keeping with the tone that we've had from the rest of the officials so far over the last week. James Bullard mentioning the fact, probably a little bit more balanced than you'd typically expect from Bullard, but still very much on the hawkish side of things. One of the key things which he said, which was interesting, is that he doesn't think the Brexit vote will have any impact on the decision on whether or not to raise interest rates at the June meeting. John Williams suggested that he expects to see 2 to 3 rate hikes this year and 3 to 4 rate hikes next year. So again, very hawkish, just really in keeping with the message which we've had from other officials so far over the past 7 days or so. I guess the key event this week in terms of the Fed side of things, though, is going to be on Friday, when we'll hear from Janet Yellen for the first time in a while. And given the comments which we've had over the last week and given the minutes, I think this is going to be the key one. This is going to be the one that really tells the markets whether June is just how live a meeting, I guess, June is. At the moment, the markets aren't really buying into quite how live that meeting is. At the moment, around 30% implied probability based on Fed funds futures of a rate hike in June, 60% in July. So clearly the markets are thinking that A, June's coming too soon, but also B, they're not really buying into James Bullard's suggestion, I guess, that the Brexit vote is going to have no impact on that particular decision. I guess the markets are probably thinking more in line with the fact that if the vote is close, then it's going to have a much larger impact, and if it's going to have a much larger influence. Whereas if the vote is seen as the Remain camp showing a significant lead, then maybe it'll be slightly less influential. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.